Good morning. What's up, everybody? Welcome back to the Everyday Growth Advisors live stream. It's a Monday. What a new day. What a new day. Welcome in, guys. Hope you guys doing good across the world. It is another week in this market, and I hope you are ready for what is about to go down. Also, please take note that the webinar for the week is already out. If you haven't gone and checked it out, please do. It's called The Exuberance Unfolds, rightfully so. Like how we cover exuberance on this stream. And this time around, this webinar is going to cover what we feel for this month going forward. So make sure you go watch it. Also, leave a like and a comment. That would truly be appreciated. And also, as usual, make sure you smash the like button on this stream if you enjoy the content that we put out. So today we are going to be covering the pre-market breakdown and then cover CVS a little bit, a stock that is pretty interesting. Of course, we'll be going through the news first, and then after which we will be breaking down the rest of the market. So I hope you guys are ready for Z ticker of the week, CVS. Huh? Good morning. What's up, Daryl, GS, Garrett? What up, Susie, Aaron, Peter, Kyle, Chia? What up, man? How are you guys doing? Welcome. All right, let's get started. So, with the classic style, news starting to turn a little hybridy, not bullish, not bearish, just kind of doing its thing. You know what the news does, reports things after they happen, so not really of use to us. I will be going through a couple of things very briefly, but then I'm going to definitely stress to watch this webinar. Watch this webinar. It's very important. Watch it. Important. Star. Okay, important. Watch it. Because majority of the things that I'm not going to say on the live stream are going to be on the webinar because I don't want to repeat myself. So therefore, make sure you go watch that video. It's only 20-something minutes where I go through a lot of what to expect for this coming month. Okay, and this coming month is going to still be filled with lots of volatility. And so we will be breaking down with you, covering everything as we go along, Monday, Wednesday, Friday on this stream as usual. Headlines are reading that stocks and commodities are rallying and treasuries are steady, which is a good thing. Okay. If you watch the webinar, you will hear me kind of confirm that I'm still risk on equities, and not just any equities, but specifically some sectors versus others. Okay. And so make sure that you go watch the webinar to know what we're looking at. Also, for those who are part of the Discord community, I just put out the playbook, which is the weekly report for you guys. Make sure you go have a look at that one. Definitely important to look at the weekly report here as I break down everything for you guys, whatever to watch and whatnot for this coming week. So make sure you go have a look at that. Guys, also people who have not taken advantage of our sale, we had a little 15K sale. Just want to put it out there once again that we have... let me just show you first before I log in. We had a 15K sale, 15K follower sale, and the code is 15 off to get 15% discount on our community, which is the Learn Compound Grow community. Let me just post that link for you guys. So if you haven't taken advantage and want to get access to our Discord community, but you've been waiting for a discount, this is the moment. You can sign up today and get 15% off with the code 15 off. The offer will end tonight, so make sure that you go have a chance at getting yours. It applies to both yearly and monthly memberships, so make sure you go take advantage of it. Remember that we have a couple of things here that will be expanding in the future, and locking in this rate is beneficial for you if you are intending to stay with us for a while. Okay. Also, this is the last week to sign up for the 5-day live course, which is the Fundamentals of Trading course. If you were interested in taking that course, make sure you go sign up by the end of this week. Our classes start next week on Monday on the 8th, okay, at 9 p.m. Eastern Time, which is 10 a.m. Singapore time on the 9th. Okay, so if you're from Singapore and you signed up for the course, make sure that you remember, because of the time difference, we start at 10 a.m. on Tuesday instead. Okay, and I'll also be sending out an email to remind you guys over the weekend of the start times and the Zoom links, etc., etc. Okay. Also, just watch out for the space on Instagram, because we are going to be making some big announcements this week with regards to the technical analysis course. Okay, and we've been working very hard to deliver that to you guys, which will be signing up sometime this week. And we are only going to be offering a limited amount of spots because of the way that the course is going to be structured. So I would highly recommend that when it comes out, you go secure your spot, because we will not be opening more spots after we fill it up. I want to ensure that the quality of our product delivered is of a high standard. Therefore, if you want to be in the wave number 17th of that course, make sure that you sign up the moment it comes out. Don't wait on it. The spots will get filled, I guarantee you. We have 1,000 alumni, and the response has been overwhelming with the amount of people who want to take the course. We're only going to have 50 spots, and then you will have to wait for the next wave. Okay, so make sure that you sign up the moment that it comes out. Don't wait on it. It will definitely be filled. All right, cool. All right. More information will be posted on Instagram. We will post all the information as when we are announcing it. But I'm just giving you guys a heads up for the people who turn up to the live stream and turn up early and are here. I hope that I will see you guys in class for the technical analysis course, which will run live on the 22nd to the 26th. That will be the days of the technical analysis course. Okay, that will be the class days. Time is the same. Still a 5-day course. Curriculum will be a 5-day thing, 2 to 3 hours per lesson. Same thing, 9 p.m. EST, 10 a.m. Singapore for those lessons. Okay, great. Just wanted to cover that, all those couple of things. So the technical analysis course is very near now, and for all of the people who have been waiting, it is now time. All right, great. Okay. Hang Seng Index to boost index members to 80 in the biggest makeover. Interesting. So they're changing the Chinese index, which is this is great news. I still maintain my investment thesis in KWeb. I think that if we come down back to the this level right here, the $87 level, I'm gonna be picking up shares of KWeb to hold for the long term. Back to the 150 moving average, which is right here. We had a nice little bounce there, but I think we may still come a little further down. We'll see how that goes in the near future. Okay, rising prices, infections, waves on India's, China still has major concerns about Boeing 737 MAX. All right. Okay. Australia, Former French president found guilty of corruption. Oof, ouchies. France, gotta get your stuff together, man. Okay, and then on the Wall Street, U.S. stock futures rise as bonds rally. This is what they are covering on Wall Street Journal. Credit Suisse to suspend 10 billion in funds tied to SoftBank. Oh no. Okay. Gets a facelift. Hedge fund business. Bank Germany tell customers to deposit elsewhere. Wow, what? Damn. Oh, okay. I see what's going on. Rocket Lab nears deal to merge with Vector Spec. Okay. Goldman cover. Consumer Head is leaving the run with Walmart FinTech. Interesting. Okay then. So lots of interesting stuff in the news today. Investors worry the Fed will have to hit the brakes. Yes, this is one of the main topics of conversation for this live stream today. And that's what I actually want to get at when we're discussing the markets today. So let me get onto it. So as you guys know, last week, a lot of the market sell-off was due to a spark of fear, a sudden fear that, Treasury rates had risen too fast too quickly. And that was a early warning siren on the possibility of the Fed having to taper rates. Now, as Powell has already mentioned last week, that's not going to happen anytime soon. Okay, but however, the market is starting to call bullshit on his thing, because they know what inflation does in hindsight in the short run, even if things go the way they are, with the amount of money supply that we have put out and the amount of stimulus that we have put out. Inflation is between a rough 1.5 to 2 level right now. This means that real yields are negative, okay, which means that the Fed can't push the ceiling much further anymore. So the market's starting to price in. Remember, the market prices in things 6 to 8 months from ahead. The market is starting to price in a Fed Powell rate increase, okay? Even though the Fed says we're not going to do it till 2 years from now, the market is starting to price it in, the likelihood of it happening sooner than 2 years. Okay, that's what's happening over here. And with the bond yield starting to rise, that gives you an inkling that that may be possible in the nearer term. Why? Because if bond yields start to increase, then it no longer becomes profitable to hold S&P 500 indexes, because then, as we have been mentioning and we've been watching for a long time, the 10-year yield, if it spikes to 1.57, which is what the S&P 500 dividend yield is, then you would rather hold a S&P 500 you would rather hold a 10-year yield, which is the 10-year bond, rather than the S&P 500. Okay, so why would you want to hold such a risky asset like the S&P 500 when you can hold bonds and get a guaranteed payout of these returns? That is the main focus that the market is putting on right now. Okay, but however, there is a difference in the way that things are happening. This has happened in the past before, guys, okay? So it's like a full cycle that's coming around. And, you know, we've been talking about this for a long time on the stream. We've been talking about it on the Discord. We've been talking about it on the stream. We've been talking about it everywhere. You can't say this has not been coming. We have been just mentioning it over and over again, because I want you guys to be prepared for it, okay? So what is likely to happen now? What is likely to happen now? Well, if the rates start to stabilize, which they seem they are, then we may get another wave up. Okay, we may get another wave up. That means the market calms its jitters and then says, everything's back to normal. But in my opinion, this is a good opportunity to pick up hedges on the market again. Okay, because what I do see happening for the time being is us going in a meandering sideways action market, where we form a channel and we stay there for a while, okay? And I've been mentioning this for a while. We may go into one of those situations where we go sideways for a while because the market's unable to decide what it wants to do, okay? And if it does that, then it might be a good time to keep selling the highs and buying the lows, okay? Selling the highs, buying the lows, selling the highs, buying the lows, but not for tech. Not for tech. You have to look at the sector rotations which are happening right now. For example, last year when the COVID crisis was around, we had tech that was leading the rally, right? Look at Nasdaq. Nasdaq went on a crazy tear, right? In March 2020, you can see from here, it ran and all the way till August, and then we had a pullback, and then it ran, and then we had a pullback, and then it ran, and it had a pullback, and then it ran, and now we're having a pullback again, okay? And so this little pullback is a nominal pullback on an uptrend. We are still in a bull market, but we are still pulling back onto the moving averages, which is a nominal thing to happen. This is not something that is crazy out of the world. It's only people who are highly levered will say, oh my god, what's happening to the stock market, because they have taken highly leveraged positions. For example, if the Wall Street Bets army went to YOLO on tendies for Tesla, this is the moment where they would be hurting, because tech has been selling off when other sectors such as the Dow Jones has been rallying. And the reason why this has been happening is because the market is starting to price in a reopening. Just look at the 1-year performance and the S&P 500 over here. Sorry, the 1-month performance, okay? You can see that energy is up. You can see that financials are up. You can see that, you know, majority of the reopening stocks such as restaurants and consumer cyclicals are up, right? What is down? What is actually down? Amazon, Tesla, Facebook, Apple, Microsoft, right? All of the tech are down. CRM, right? AMD, okay? The rest of the stuff is really green. So we are seeing rotations into energy and financials. Now, does that mean you just go ahead and buy these? No, it does not. It does not mean that, okay? This is the reason why you have to have a diversified approach to the way you manage your portfolio. And so this is absolutely not the right time to buy tech, but you should be keeping your eyes open to purchase nibbling amounts of shares of companies that you really like, that are trading undervalued. What are some of those companies? For example, Amazon, pick up nibbles, right? You pick up maybe a quarter of a position of what you usually would, right? Maybe you were planning to allocate 20,000 to it. You allocate now only 5 to 6,000. Maybe you pick up 2 shares. That's it. And then Apple still hasn't come down to my valuation where I will pick it up. I value Apple at around $100, right? And so I won't buy Apple until it comes down to $100 for my long-term portfolio, right? And then also, you know, some of this other stuff like Johnson & Johnson, right? This is a good stock to own long-term, and then now they just got approved, right, for the vaccine, blah, 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 right? Banks are slightly overvalued right now, as I mentioned in the previous live stream. And by the way, if you went on if you were here a part of the previous live stream that we had on Friday, what did I mention? I mentioned that banks were nearing the top of their cycle, right? And why did I mention that? Because we were approaching the top of the price to book ratio, right? This is what we were mentioning just on the Friday live stream. Okay, we were talking about this. And then what happened, right, when we got off the live stream, I took a short position on JP Morgan, and we ended up making $300 on that put. Okay, and it was a great little play. All right, so the time to short financials is definitely here. This is the time you start taking profits on these things, and wait for JP Morgan to come down to the $140 mark. This is a nice little level to buy it again, right? But till then, you want to definitely short this down. You know, you don't need to do it necessarily right now, but what I'm saying is financials are reaching the top of their cycle. Therefore, do not be buying financials right now. That run has already happened. Okay, I do see considerable possibility in energy still. Okay, I'm still bullish on energy, but I'm bullish cautiously. All right, and you can invest in energy by investing in XOP, which is the oil exploration ETF, or you could go with XLE, which is the Select Spider Trust, which is for energy as well. So there are 2 ways you can get exposure to this. Obviously, never buy it on such a high over here. Wait for it to pull back a little bit, maybe to the 42 level, and then get into the next rally to the upside. Okay, so this little rally that you're seeing in the market right now, this is you know, a great looking rally, right? Kind of gap up from the Friday. So let's have a look at Nasdaq here. You'll see what I mean. We had a little bit of a nice buy up here, but I say on this wave up, you definitely want to take some short positions as hedges on your portfolio still, okay? And that's what I recommend. I recommend still remaining hedged, because the market may irrationally price in a rate increase way in advance from before the Fed even announces it, okay? And since we are still overbought on certain levels here, and when you look at, you know, the Nasdaq, when we look at the Nasdaq here on the weekly chart, you know, you can see what I'm talking about, right? We are still far extended from the 50 moving average, which is where we've been tracking for a while, right? The 50 moving average has been a nice little bounce zone all the time. That's where we've been tracking for the longest time on the weekly, and you can see how far we are away from it. We still have a ways to go, so which means to say, if you look at this over here, realistically speaking, on the Nasdaq, we could come down to 11,800 or 11,700, you know, which is this level right here, which will coincide with the 50 moving average, you know, somewhere between this old support here, or we could even come down to this further level here at 12,000 plus. So a $900 drop is still possible. Okay, it's still possible here for a corrective wave down. Okay, the same thing can be said about SPX. So let me go into SPX and I'll show you what I mean, which is S&P 500, right? Looking at this on the weekly chart, we are still far above the moving average once again, right? Okay, we can still come down to the 3500s on S&P 500. Okay, we could come down to 3500. So this is a very possible zone that SPY can come down to bounce. Okay, highly possible. This is also a dual zone here. This is the previous resistance. 3500s are not out of question, guys. Okay, so on the weekly, things still look overbought. All right, now you have to understand at this point, do not be over leveraging your positions. All right, do not over lever. This is the time when you have to be cautious with these markets. Okay, cautious with the markets. And remember, I plotted 3 zones here for us to hit, right? I said if we were to break this zone, we would go down to this zone, right? And then if we would break this zone, we go down to this zone, and we came down to touch this zone just last week. Okay, so all 3 of the zones got broken, and now we are correcting back to the 50 moving average. Okay, right here. And it seems like we want to go for another wave down. And if we were to go down for another wave down, then we are pretty much dropping into no man's land here, where we don't know where roughly it would be, but I would say somewhere around here at 3770. Okay, so this would be the next little support right here. I would say somewhere around here. Okay, and this would be your next line of defense, if so you will. Okay, so we already hit all our targets here, and you know, we plotted this a week back, and I was telling you guys, you know, if we hit this, then we go here. So the next one right here will be 3770, and then below that it would be around the 3725 level, right? Somewhere around here, it's 3725. This would be it right here. 3725 right here. Boom. So these are their next targets to the bottom. Okay, these are their next targets to the bottom. I'll save that in there, and we'll delete the ones that we have hit already, so that we know, you know, we don't need to worry about these. You know, these are going to be your next two targets down here, and then the full extension will be down here. So 36 will be the next level down there. Okay. So yes, the market can continue to grow further down, which is normal. Okay, it's not something crazy. So I would say wave up, get hedges, ride the wave down. Don't over allocate into risk assets that are not going to give you return. Okay, emerging markets, energy seems okay. Cyclicals seem okay, with consumer defensive also okay. But you really want to hammer home on you know, reopening stocks. All right, reopening stocks. For the full report, you can read it on the Discord channel, where I put all of my sector rotations that I see for the month, and the full breakdown on there. Okay, great, cool. All right. So let's have a look at the pre-market movers here. We have SOS up 24%. Wow. Okay. Huh. Interesting. Well, this was sold off irrationally last week. Okay. I have sold puts on that one. Sundial Growers, AMC's up 8% to $8. Palantir up 6%. Okay. Dow Jones, let's have a look at that. Apple, J&J, Boeing, Microsoft, Walmart. A little bit of money flowing back into some regions of the market. JP Morgan also seeing a little uptick there. Today we'll have FOMC members speaking. Manufacturing PMI at 945. Construction spending, this will be interesting. Watch Caterpillar on this news. And then manufacturing PMI. Okay. Today Zoom will be reporting earnings. So will Mercado Libre. Okay, which is the kind of Amazon of Latin America. So watch that as well. Definitely. Okay. Coolio. S&P 500 here. Probably the same names. Apple, yada yada. These would be about the same. CCL. Okay. 1.9 million shares. We should watch CCL today. AAL as well. American Airlines should be one to watch. Tesla. Okay. Facebook also another one that I want to watch. All right. Nasdaq. Let's see here. Okay. Baidu up 5%, getting bought up aggressively there. JD as well. So Chinese stocks seeing a little bit of inflows today, guys. So once again, make sure that you watch KWeb. This is the one that you want to really be looking at. Okay, KWeb, which tracks your Chinese ETF for internet stocks. Okay, it fell down quite a bit. And I've been mentioning for a long time that Chinese stocks are still a buy. So it's between, if you want to go emerging markets, which is, by the way, another sector that I'm looking at, and I cover in the webinar, JPEM and KWeb are the two that you want to buy. Okay, I would go KWeb first and then JPEM. All right, buying shares of these will pay off in the long run. They are both ETFs. Okay, cool. All right, there goes that pre-market. And let's see here. Oops, I don't need this. Okay, so ignore that one. Wex, whatever that is, Energy, okay. Dish, Airlease, Berkeley, Okay, not much on this side here. Okay, cool. Okay, I'll get through CVS in a second here. Let me answer some of the questions. Oh, you guys don't have any questions today? What? How is this possible, man? What's in the world is going on? How is the chat so quiet today? Hi, guys. How are you doing? Want to take a second out of your day to help me out with something? Smash the like button. If you can, I would really appreciate it. You know, take a second out of your day. You see the little thumbs up. That's right on the screen. Just click it real quick. Tap it slowly. Make love to it. Please. Thank you. Are you afraid of Head and Shoulders on K-Web? Maybe. But you know what? If you don't go big, you don't, get anything out of it. So, we could talk about how this is a Head and Shoulders or whatnot, but I like investing in this ETF long term. I think that it's a great. It comprises of a lot of great investments in the Chinese stock market, and I specifically like it for the opportunity that it holds for the future. Okay, so whether I buy it here, the couple of dollars difference is not going to make a big deal. In the long run, this looks like still a pretty good investment as it's come down to the 50 moving average on daily, and it has very good prospects to the upside. Okay, so that's the reason why I would buy it. Looking at this, it's looked like it's retraced enough for it, and also that doji on Friday was a really nice little bounce there. So I like that. It could form a Head and Shoulders, but I don't really care much about it. Okay, cool. Let's see here. No other questions? There's no way. How is that possible, guys? Also, guys, if you want to support this YouTube channel, you now can, by the way. You can be a part of memberships where you can be a lion or a wolf, and you get certain perks like custom emojis and custom prioritized sticker breakdowns. You can click on join in our channel now and be a member to support this channel. I would truly appreciate it if you wanted to. If not, it's all good. I don't have anything against you guys. Okay, let's do the CBS breakdown. Monday blues. Yeah, everyone's quiet today. This is the least quiet chat I've had in a long time. It's all good though. Okay, so CVS, a good little thing to cover this week, especially with the COVID crisis, raging through America, vaccine distributions, etc. And there are a couple of things you need to know about this business right now. The first thing is, looking at their Q4 earnings, which I was reading earlier. This company, okay, you guys know what CVS is, right? They do, a majority of different things, but excuse me, mainly CVS lately has been, dabbling into the world of healthcare, okay, more than anything else, okay? CVS pretty famously for being a drugstore, where they have a pharmacy and you go in, you can get chocolates on sale for Halloween, and they have candy and soda and alcohol and liquor and everything that you want all in the same place. I don't know if they still have all that stuff, but I'm pretty sure they do. They had it when I was there. You could get like Red Bull and Four Loko. Well, maybe you could get Four Loko. Maybe I'm reminiscing on a different time. Maybe I'm reminiscing on a different place. Anybody remember Four Loko? Okay, I guess I gotta stop talking about Four Loko. But who remembers Four Loko though? That thing was great when you wanted to get like your tail lights smashed off on your heads. 2020 highlights for CVS. Okay. Adjusted EPS reflects outperformance. Adjusted revenue growth was 3.5%. And then adjusted EPS growth was about 6%. Okay. Now, the funny thing is, before they got into the vaccine distribution, Q4 estimated was impacted by COVID. Okay. And their fiscal year generated $15.9 billion in operational cash flows. Now, this is not bad. The main thing about this company that I'm looking at right now, it's mainly that this is a very highly levered company. Okay, so why does that matter? Well, look at their quick ratio and current ratio. People who've been watching this stream for a long time, you know that we talk about this quite often. Look at the interest coverage ratio and the debt to equity. They don't have, okay, their assets over liabilities are less than 1, barely, okay? But then they have enough interest they have interest coverage ratio, which is more than 3, which is okay. But they're basically slightly levered. They're levered too much in terms of equity, okay? Which means to say that their shareholders aren't too happy about this. This is the reason why the stock price is depressed, okay? Revenues aren't growing at a very quick pace, but they are kind of growing at like a 3% pace per year, okay? And so they say they achieved low 4x's for their leverage ratio at the end of the year, okay? Which is, 4 times leverage is pretty crazy, okay? For a business like that. However, on the flip positive side, okay, the company has a positive net income, the company has a positive revenue, and only EPS is negative, okay? Net margins is still positive, ROIC is positive, return on equity is positive, ROA is also positive, okay? Which means to say that this company is struggling with leverage. That's what they're struggling with, okay? But in good news, they've continued to lead the COVID-19 response. They have 15 minutes tests administered, 8 million new customers to CVS Health through testing, 40% return-ready clients, and then 3 million vaccinations administered at LTC facilities, which are long-term care facilities, okay? More than 40K long-term care facilities are using CVS Health, and 90% of second doses completed at SNFs, which are skilled nursing facilities, okay? Okay, now, financial overview-wise, we're going to go through more about this on Wednesday in terms of financials. But just know that their free cash flows are pretty strong at the moment, which I hope can continue. My problem with this is COVID crisis, and it might be a temporary bump in their balance sheet. But how are they going to bank on this big rush of people coming in? They need a solid trajectory plan in order to retain these customers. Okay, that's what I'm saying. COVID's here for a while, but then when it goes away, then what happens, right? That's what I'm saying. So on the daily, this looks pretty nice, except for it broke out on Friday right here. Oops, wrong color. On Friday, it broke out right here on this down channel. We'll see if we can get a bounce and come back into this channel here, the bounce. I don't know if we will, but let's have a look. And they repaid $4.25 billion of net debt, which is good. We need to look at how much of debt they have. So look at this right here. They have $85 billion in debt, guys. Okay. And they paid, how much of it? $4 billion. That's, oh boy. That's 5% or so, which is okay, I guess, but they have a long way to go. And they say that they're on track to achieving 3 times leverage target in 2022, which means that this year they'll be paying down more debt. And so my question remains that if this company is paying down debt, then all of the momentum that it's using for cash flow generation through the COVID crisis is going to be drowned, not in expansion, but in paying down debt. And so I hope that management has some kind of a plan in play to take advantage of the increased cash flow to really benefit them. If you look at adjusted revenues, adjusted operating income, GAAP EPS, and adjusted EPS here, the only thing that's up is cash flow from operations. which can be attributed to increased people visiting their stores because of COVID. So all in all, the way I look at this is not favorable, if anything, the way I'm looking at it. Yeah, the numbers look okay, but in my opinion, it's not about the short-term investment here. It's about the long-term winning of this company. And right now, it doesn't look so great from what I'm looking at. Now, of course, I'm going to have to still value the business and see how much it costs and how much, other things that play into the 10Q, etc., with the SEC with their filing. But here's their 2021 outlook. So they're focused on delivering value for shareholders, revenues to grow between 3 to 4%, cost savings expected to drive 900 to 1.1 billion in savings. So this is good news. Capital expenditures of 2.7 to 3 billion, increasing investments. I feel like this is a bit too little though. I think they should spend more. As an investor, I would like to see them spend more on these things. And they intend to generate 12 to 12.5 billion in cash flow from operations, which is lower. So they're going to generate less cash flow from operations than now. Look at, they generated how much? They generated 15.9 billion, and now next year they want to generate 12 to 12.5, which means they're expecting cash flows to taper down. Maintaining dividend, okay, that's good. So from my perspective, they really need this COVID crisis to kind of help them turn things around. And I really hope it does for them. All in all, right now, this is a hold. Like I wouldn't buy or I wouldn't sell. This is a hold stock, like something you just hold. I was already doing a little bit of digging on their balance sheet, but I'll get into this more on the Wednesday for the fundamental analysis, and this too. So let's have a look at its technicals real quick. In terms of technicals, this has been kind of in a really nice little flag pattern. Not a bull flag, but kind of a bull flag, but not really. It broke out of this channel here. We were planning on entering after a bounce, but we didn't get that. So this is now a dud. But if it can somehow rally back up and go back above into the channel, then this may still be a valid play to the upside. The first target would be the $76 level, and then the second target would be the $82 level. So these two targets will be where CVS would head to if it can make a strong recovery. If it doesn't, then this is going to go da-dap, like that. Okay, to the downside. So we'll see if it can break back up above on a wave up. If not, we'll see it further fall down. If it does fall down, we'll look at a break below $66 to enter a short position, I want to say. A break below 66 bucks should be a good area to take a short here. So let me set an alert real quick. And that will give us a little bit of a heads up on when CBS crosses that, so that we can make some informed decisions on whether we want to play that. All in all, nothing yet. And then if it breaks back above here, let's see, 70. Actually, let's just get back like here. $70.65. There we go. Okay, cool. So we have alerts on both sides, and they will tell us when we need to take something. Okay, anybody have any questions today? Let's see. Kiss the like button. Thank you. Monday Blues. T stonks only go up. They say that's true. Hopped in an ARC mailing list. That's good. The Sunday Scaries and the bottle of wine hitting hard this morning. Yo, for Loco. Oh my God. High school days. Yep, those were the days. That was college days. I know. Well, who says you can't drink Four Loko now, man? Mix it up with some tequila, dude. And maybe splash a little bit of, I don't know, Red Bull in there, too. Make it a jungle juice, you know. Gotta crack open a can sometimes with you guys, you know. When I come back to California, that's all we're drinking, guys. Four Loko, nothing else. Sorry. Sorry, not sorry. Four Loko was a hangover from hell, I agree. I do love high scale days. I'm down for Four Lokos pre-market. Yo, pre-market though. Nah, bro. Nah. No Four Loko for pre-market, man. That's gonna mess me up for sure. You'll end up fighting yourself drinking that stuff. That is so true. But seriously though. I was just kidding. I think nowadays I'm more refined. I think I'll make do with the bottle of wine or it could also be a bottle of Woodford, you know, some bourbon. Can't say no to good bourbon. Those are probably my preferences nowadays. Or whiskey. Macallan 12 is good. Those are probably my choices nowadays. Doesn't give me a hangover. Whiskey is always good. I don't know. I can never go wrong with whiskey. Well, I guess I have 20 minutes left here, so let's talk about whiskey. Because I'm done with the live stream. Now it's just me hanging out with you guys. Unless I keep it short and the live stream here, and then I jump on the Discord community to have a chat with you guys. But yeah. Weller or Blanton's. Never heard of that before. Let's check it out. Weller. Oh, wait a minute. I think you told me about this before, Jacob. I have a feeling. Yeah, you did. You did. Ooh, this one looks nice. Wheated bourbon. Interesting. Okay, I see. What was the other one? It was Blanton's. Oh, interesting. Oh, wait a minute. We've had this one, I think. I've had this one before, I think. Yeah, but I've had this one before. But I had it one time only. It was good. Yes. Yeah, these do look... Yeah, Woodford and this would be probably on the same level, huh? I like Woodford. Have a nice little old-fashioned with Woodford, but no simple syrup. Yeah, would love that. Alright, well, we might as well look at other stuff that I'm not looking at yet and see if we can find any opportunities since I'm here. Let's see. Probably better look at 4-hour time frames at this point. Man, I don't know why TradingView always does this. It doesn't save my chart. Just drinking Woodford last night. Yeah, nice. Woodford's bomb. Yep, I agree. GKS, maybe a $75 call for mid-June. Looking at cup and handle forming a little as well. GKS. Cup and handle? Where? Where's the cup and handle, man? Why do I not see the cup and handle? Oh, you mean upside down cup and handle. Yeah, nah. It's more like a, I don't know, man. It's just like maybe, but honestly I don't like this, like when it has this many like peaks, it's not a very smooth cup, you know what I mean? This is more like a, I don't know, it's more like an iron with steam coming out of it. You know? What about Wall Street? When you said WB, I was like Wall Street bets. What about WB currently at 61 for Chinese social media platforms swing play volatile? Yeah, possibly. Sure. This one looks good. Bounce on the 50. Nice little buy up pre-market. It has to go close a gap. I think this one can go further up. Yep. Looks like a nice strong uptrend too. Yeah, I like it. Wait for the confirmation though. I missed the whiskey talk. My boss asked me a question, lol, but Jameson is the way to go. Damn, you guys. Jameson's is pretty good. Jameson's alright. It's smooth, but I don't know, man. I used to have a bartender friend, like my bartender mate, who used to do shots of it, and to be honest, I just couldn't keep up with him, man. Can you analyze PDD? Yes, I can. PDD broke below this thing, and then now it's coming back up again. So possible bounce on this retracement here. I mean, it's up like 5%. Yeah, I mean, we covered the stock, and we did say the valuation was at 245. So this stock has ways to go to the upside. I think buying the stock is a good idea. But if you're playing options, you got to go pretty far out in expiries. That's all. Costco 350 calls, 319 expiries. Your expiry is too close. Earnings are coming up in 3 days. I think you need to assess that after the earnings. Yeah, so that's going to be a tough one, Santosh. Earnings coming out, let the earnings pass, and then you can see what's going to happen. But I like playing the pullback, though. It's nice to play the pullback here, to be honest. Just don't play it too like aggressively. That's what I would do. If I hop in wing and want. What? What's wing and want? Did you mean Wingstop? Cameron, can you clarify? Because I don't know which ticker you're talking about. 140? Do you mean 140 calls? Yeah, 1 month out should be okay. But it's already up like 3% pre-market, so you're going to have like, you know, you're going to have a tough time with that. Would you mind looking at Twilio? It's been respecting the 50 EMA. Okay. Twilio is looking good. I like it. Nice little broad out moving averages. Looks super bullish. Nice little uptrend. Yeah, I like this one. It's looking good. I think it's a good time to get it here too. Probably a run up. But then remember, don't go crazy over this. As I just mentioned, the arcing trend of the market is still bearish on tech. So don't go crazy. That's all I'm going to say. WBA. $70 calls for 2022. Yo, I mean, I don't know. For such a far out call, technicals don't matter. As I mentioned many times on this stream, if you're looking at such a far out call for a stock, it's not necessary for you to do any TA. You need to go look at why you want to buy the stock to begin with. Like, what's your fundamental reasoning? Okay, let's end the stream here for now. Fundamental Wednesday on CVS on Wednesday. Appreciate you guys tuning in. Make sure you smash the like button on your way out. Thank you very much. Also, last chance to get in the Discord for 15% off. Use the code 15 off. Last chance to sign up for beginner course, which is live this coming week on the 8th. Make sure you sign up on the learncompoundgrow.com. The link is in the chat, pinned to the top. Everything's there, and you can navigate through to find what you need. Thank you very much for all of your time here, taking the time to be here. I love you guys, and I will see y'all on Wednesday. Bye-bye.